believe that top quartile drives the lion's share of venture returns, and in the wake of the last bubble bursting, I think LPs realize that unless you can get into those funds, do you really want to allocate to venture? Now, at the same time, you've had the buyout world go essentially dark with the credit crisis. And so LPs are staring down the barrel of having to put 10 to 15% of their billions of dollars to work in alternative assets. They could put it into buyout, but it's not going to do anything. They have venture, so they have to put money into venture. And at the same time, I think you've seen, at least over the last 5 years or so, that the average venture fund size decreased. Now I think it's going to increase again. I think that's the trend that we're starting to see. But it's sort of the venture model. I don't know if you would call it broken, but there's this there's supply and demand imbalances here that are going to make it continue at sort of some level, funding people that probably ought not to be funded in the business, and that will beget fundings of deals that probably ought not to be funded. But again, I think that there will be returns for those.
You were looking at me for a
minute. We don't think it's broken. We think there are still exits for good companies, good management teams. Like I said, 2007 was actually quite a good year. If you look at venture market returns, though, they are highly, highly correlated with NASDAQ. Unless we see a market come back in the short term, you'll see some downturn in performance over the next year or so.
I'm on the board of a state entity that invests in venture funds, and then I'm also on the buy side of the venture fund side as well. But what's really interesting is that all of the folks that are investing in venture funds right now, they all think that they can invest in the top decile or the top quartile of those venture funds. And when you look across...
And everybody says they're the top quartile.
Right, and everybody says they're the top quartile, but when you look across the results, right, that's what really drives all of the money going into the venture business. It's thinking that you can invest in one of those top decile or top quartile funds, because they're the ones that are driving the returns. The other funds, as a whole, have negative or single-digit returns. So from that sense, you look at it and say, yeah, the venture model is broken, right? And I think from the entrepreneur side, there's plenty of money out there. So I don't think that side of it's broken. But I think there is going to be over the next, I don't think it's next year, but I think this tends to work itself out over time where if the venture business doesn't deliver results, eventually people will start to, pull back their investment in those venture funds. Now, we haven't seen that yet because there's so much of pent-up demand chasing those top quartile or top decile returns.
And 1998 and 1999, and I don't remember the numbers exactly, and Bob, you might have more information on this, but there were close to 700 new venture funds that were created during that period of time. And I can't tell you the number of times people would come up to me and say, you have the coolest job in the world. You come into the office around 10 o'clock, you make a couple of phone calls, you go to lunch, and you're on the golf course by 2. And I'm looking at them saying, what life are you watching? I mean, my day typically starts somewhere around 6 or 6:30 with a phone call from an entrepreneur because he's a morning person. And my day ends somewhere around 10 or 10:30 because that entrepreneur is a night person. And during the day, I am running as fast as I can. And it's actually, as a venture capitalist...
Carol is actually only about 25 years old.
As a venture capitalist, I'm actually working a lot harder than I ever did as an entrepreneur or as a corporate executive. So, I think what happened is that there were a ton of venture funds that got started. And there was a lot of money that was put into them. They all figured out very quickly that this is not the ideal job that they thought it was going to be. And they literally just stopped or quit or, didn't produce the results, which is the reason why statistically the community is looking like it's been really messed up, because there were a bunch of people that entered in all at the same time. And in the 2002-2004 timeframe, there was the single largest number of failures of the venture community. And so we're just statistically seeing that being washed out. I actually think that, especially here in Silicon Valley, venture is extremely alive, well, healthy. And some of the venture funds are significantly better than I think they've been in a long time.
You know, if you think about it, I mean, the venture model depends on two types of exits, right? It depends on the M&A exit, it depends on the IPO exit. And I don't think there's anything fundamentally broken with the venture model. I think it's ingrained in our culture. Entrepreneurialism is ingrained in our culture. You know, if you don't believe that, just go to another country and live there for a little while. I had a startup entrepreneur friend who went to France during the nuclear winter, and he tried to start a company in France, and it took him 2 years to get a license to start. I mean, here it takes you 24 hours. Right? Go to your lawyer's office, and you're incorporated the next day. So I think it's in the culture. It's in both starting companies and investing in companies is in the culture. There's talented people on both sides of the equation. I think that if you look back over the last over this last decade, speaking from a lawyer's perspective, I probably look at it a little bit differently than these guys do. But we had an exogenous event, which was a massive interdiction by the government, by the regulators, in a reaction to market excesses that severely, hampered the formation of new public companies. Sarbanes-Oxley was an enormous tax on small companies.
Still is.
And it still is, and it's not adding a whole lot of value as far as I can tell. And so I think the model will continue. I think it'll be healthy, but I think we need to see hopefully some recognition of sort of the overbalance onto the regulatory side. I mean, we killed an entire cohort of IPO companies, frankly, during this past decade. And so I think we need some regulatory relief in that area. And it's an election year, folks.